going on? Welcome to Talk Finance with me, your host, KinToshi. And you Tuesday, subscribe, turn on the bell notification here to Talk Finance. I'm gonna change this little graphic over here. It's kind of like in my face a little bit when I'm talking, so I'm gonna make it smaller. Um, I am back. I try and do these week to week. I was kind of like away for a bit, but I try and read the news as best I can. Let me check the audio levels on the monitor. One moment, please. All right, so this should be a better audio level all around. Let's see. I've got some articles here, and I'm going to be reading through these fairly quickly, kind of, because then I got to go get into coding classwork stuff. So let's get on over into here on the first news article that I've got. I'll be right back after this transition into it. All right, so this little transitional thing here. Let's go right on to the first thing. We got Yahoo Finance and Jennifer Skonberger. MasterCard backed offers crypto-based credit debit cards. So I've spoken on this before, but it seems like there's some more news here going on here. Let's check I want to check the monitor level once more. Please bear with me. All right, so that's pretty good. All right, cryptocurrency exchange backed is partnering with MasterCard MA to offer crypto debit and credit cards, making it easier for consumers to pay using digital coins via MasterCard and backed BKKT business, and that's the publicly traded company ticker for backed. Businesses and banks will be able to issue their own branded crypto debit and credit cards to consumers who want them. Holders can use Bitcoin purchase through backed with the card or linked to a fiat-based funding source and receive Bitcoin rewards. Backed stock, which publicly listed on NYSE on October 18th, skyrocketed by over 30% at Monday's opening bell, adding to Friday's advance of over 13%. With the MasterCard partnership, companies will be able to offer crypto as part of their loyalty reward programs backed by Backed. For instance, hotels or restaurants who offer points for freebies or other perks could also offer customers the option to convert the points into cryptocurrency of their choosing. The partnership comes as more Americans become interested in transacting in digital assets. This businesses and service providers making incremental steps towards making it easier to transact in crypto. Nearly half of respondents purchased crypto in the first half of 2021, according to a backed survey of 2,000 consumers. And according to the MasterCard New Payments Index, 77% of millennials stated that they are interested in learning more about cryptocurrency, with 75% saying that they would use cryptocurrency if they understood it better. The partnership with MasterCard comes after Backed partnered with Google to allow its users to purchase goods and services using Bitcoin and other cryptocurrencies through the Google Pay wallet and payment system. Backed, which started as a cryptocurrency exchange for institutional investors, has moved into the consumer space with an app aimed at being a tool to let people manage their digital assets, including cryptocurrencies. Similar to Venmo, Backed projects the app will amass more than 30 million users in 5 years. So I've been following Backed for some time now, and most definitely this is why I've been following Backed for some time now. If I could, I'd even purchase Backed myself. If they were selling their company, I'd want to purchase Backed company if I could, because I think it's a great platform like that. So this is Yahoo Finance news segment there. Let's go on. I'm going to spin up the next article here and keep this rolling. Again, if you're on the YouTube side, please do subscribe, turn on the bell notifications. News segment there. All right, monitors sound good. Monitors sounding good. And if you're out there, you want to chat with me or ask questions, let me know in the chat or on the comments below. I'll have all these articles in the recap descriptions below, so you can read through them at your own due diligence. go on to the next article here. All right, so this is from writer Ryan Brown for Tech Side of CNBC. Silicon Valley entrepreneur Sam Altman wants to scan your eyes in exchange for free cryptocurrency. Tech millionaire Sam Altman's new startup WorldCoin uses orb-shaped devices to scan people's eyes in exchange for free cryptocurrency. The company has so far amassed over 100,000 users globally already and aims to hit the 1 billion user milestone by 2023. WorldCoin CEO Alex Blania hinted WorldCoin could be used as I'm not going to talk about this, whatever it is, but I will say about what the aspect of scanning your eyes is. It sounds like something out of a sci-fi movie, metallic orbs that scan people's eyes to pay them in digital currency. That's what tech investor Sam Altman has been working on for his new startup, a company called WorldCoin. Launched out of stealth on Thursday, WorldCoin promises to hand out free cryptocurrency to people who verify their accounts by taking an iris scan. I already don't like this, me personally. It says it's attracted $25 million in funding from Silicon Valley investors, including Andreessen Horowitz, Coinbase and billionaire LinkedIn co-founder. Okay, I don't care about that either. CEO of artificial intelligence group OpenAI and former president of startup accelerator Y Combinator co-founded the company with theoretical physics students Alex Blania and Max Noviston, a former investment associate at Bridgewater Associates. The idea seems outlandish at first. Free money, and all I need to do is have my eyes scanned. It sounds good to be true. I'm definitely not, me personally, I'm not going to let you scan my eyes for free crypto. Sorry. I'm not selling my eyes for tokens, especially something called WorldCoin. Come on now. It's about to expanding the reach of cryptocurrencies and financial services more broadly into masses. Yeah, so my take on this is just expand upon, I guess, like Bitcoin utility. Pay people in Bitcoin for scanning their eyes who want to scan their eyes. Less than 3% of the global population are crypto users, according to the virtual currency exchange Crypto.com. Cryptocurrency is a powerful thing. I don't want to. So it's already shipped its orb-shaped devices to 12 people in 12 countries. I mean, this isn't the first thing. This isn't the first thing I've heard for rewarding people in crypto. It is actually, there was another one that you could geotag locations and geotag your locations and earn some sort of token for geotagging. That was actually more interesting what this is. Scanning your eyes. What a way to give more of my identity away. Doesn't Facebook already get enough of my identity? Why do I want to scan my eyes and give that away? The image is then encrypted and becomes a unique code. Yeah. Testers get users to sign up by having their iris scanned. The image is then encrypted and becomes a unique code. Absolutely not. Not happening with my eyes. Although the original data is deleted to protect users' privacy, following that, users are given a free share of WorldCoin's cryptocurrency. I don't even necessarily can even believe. We can't even believe anything Facebook says. Can we believe anything that they're gonna delete our data? Come on now. I don't know, man. We designed the whole system to be fundamentally privacy. I wish I didn't really select this article. The company has so far amassed over. I already read that part. Which raises a big question: how exactly is it meant to be used? Well, one early feature in the project will be a digital wallet that lets users store their crypto and make payments. Boring. There's just like 1,000 wallets out there. But more broadly, Blania hopes to. How did they raise 25 million? Come on, jeez. That we don't see today and are really hard to build today because a few people hold crypto. I don't want to build on top of your apps. Sorry, man. Network effects are these very coveted things that are incredibly big. Blania says you see this in Facebook as soon as you suddenly have 1 billion people in every day. Yeah, it sounds like a nightmare compared to Facebook. This thing, scanning your iris. You know what, man? I'm sorry. I'm just not interested. Nah, not interested. I'm not really into that. I think we're gonna find a different article. I'm gonna keep moving on here. Kind of wish I didn't pick that article. Come on, CNBC. What is that? I guess I have to give CNBC credit because for helping me stay aware of something I definitely don't want to participate in. Why would I want to scan my iris? Let's go into the next one. All right, this is from Finance Feeds. Finance Feeds, digital dollar, but without blockchain. A digital dollar is on the horizon and being actively considered by the Fed and the SEC in a push towards digitalization of the financial ecosystem and able to stop the advance of crypto tokens and stablecoins. But in a new twist last week, reports have emerged that it may not be based on blockchain after all. So, as we know, the Chinese yuan is going into a digital cryptocurrency token, blockchain-backed CNY or whatever. When news of the digital dollar began with news of a digital dollar being in the works emerged. I mean, I've heard about this for like 4 years now. It was assumed that it would be on the blockchain, similar to crypto stablecoins that are in circulation now. And there was also active discussion on whether it would use a private blockchain. It would definitely use a private blockchain. It would probably use something like Sawtooth or like that, Hyperledger Sawtooth or whatever. Something like a blockchain, corporate-centric blockchain through Intel. Whether the Fed would develop one on its own, but comments from the former Boston Federal Reserve President Eric Rosengren seem to be indicating something to the contrary. Rosengren commented that blockchain would not be part of the picture because we want to have sufficient throughput and speed of transactions, adding that the distributed ledger is not as effective a mechanism for meeting kind of the operational needs that we think we will need. Rosengren has been one of the few who has read the yet unreleased paper issued by the Fed on the feasibility of CBDCs, and he should be having an inside view on the thinking of the Fed on what technology it should be using for the digital dollar. It should be considered as a big setback for the blockchain industry, as the assumption all around was that anything related to digital currencies would automatically be using the blockchain at the backbone. If Fed goes ahead with a different technology and it proves to be a success, then it's quite likely that the other countries and central banks would also like to piggyback on the same solution, making blockchain irrelevant as far as digital currencies are concerned. On the main considerations for any CBDC would be the speed of transactions and the reliability of the network and the volumes that need to be handled by the network, and the peak throughput is likely to be much larger than that of the blockchain, having most of the blockchains have handled in real time so far. Is likely to be the point of contention when the decision over the infrastructure to be used for CBDCs would come under discussion. Blockchain does have its advantage with regards to transparency and security, but it remains to be seen what alternatives the Fed has under consideration for implementing the digital dollar. Interesting. I find that very interesting. I'm going to spin up the next article here. And we'll keep going on. If you're on the YouTube side, again, please do subscribe, turn on the bell notifications. So let's scoop up this next article here. All right, so which blockchain is the most decentralized? Experts answer. From Max Jakubowski, Cointelegraph. Introduction. I'm not going to read the introduction. You can read these introductions, but I want to actually go directly to the statements here. Aaron Lammer of Radical Radical. Aaron currently serves as a DeFi specialist at Radical, a quantitative trading firm with a focus on digital assets. If a platonic ideal of decentralization is taken to be the model put forth by Satoshi Nakamoto and the cypherpunks who preceded them, then it would be hard for any network to beat Bitcoin. But the purpose of networks like Ethereum and other smart contract platforms isn't to beat Bitcoin in a decentralization competition. Smart contracts are intended to introduce whole new universes of possibility that might be impossible within the confines of someone else's definition of decentralization. And we've already seen some of these possibilities realized with NFTs and DeFi. The power of crypto is that it can align interests in multiple parties, even though they have fundamental disagreements, like how important decentralized really is. So I think it is less about which chain is more decentralized than some other chain, and more about figuring out what is the optimal form of decentralization for each application. Atash Amir of Star Launch. I'd like to note that the terms of decentralization and ownership are too often thrown around without true consideration of what they really imply. For example, decentralization should be considered a dynamic state. I think at this point, almost like decentralized is, this word decentralized is kind of like a gimmicky term, but it has a protocol to it, and the protocol is what's important, yeah. One method of determining the ownership of a chain can be defined by the percentage of a total supply belonging to any given entity, and by virtue of such, incurring a truly variable state of decentralization throughout its life cycle. For example, when the first Bitcoin block was mined, Satoshi owned 100% of the Bitcoin network. This has continued until, of course, other miners entered the space. That being said, token share is only one of multiple factors by determining locality. We mustn't neglect the root of all blockchain utility, consensus, different chains, utility consensus. Utility, which is consensus. Okay. Different chains offer different solutions to block transaction validity. This arguably is where one should first look when searching for signs of decentralization. If one entity runs 51+% of incoming hashing power, they now have majority influence of what should be consensual circumstances. Currently, there are a handful of layer 1 chains proposing a variety of unique consensus and distributed methods. Which is best? Well, right now that answer is to be answered. Adrian Creon of Spielworks. Decentralization can mean a number of things. A, decentralized infrastructure, the number of parties running the network infrastructure, and diversity of hardware and the distribution of a number of different locations. Decentralized governance, how decisions are about future development of the network are being taken. Decentralized software development, who contributes to source code development, who decides which changes get accepted. I like this answer right here. Decentralized software development, who contributes to source code development, who decides which changes get accepted. I like that one. Scattered / equal token distribution, who owns how many native tokens in the network. Typically, when people ask, what about the grade of decentralization of a network, they do so based upon one or more of these aspects, but they hardly make it clear which one they are reflecting on. Also, the question is, what exactly is emphasized on each of the categories, i.e., is it more important to have an even geographical distribution of Bitcoin miners if it means that most of those nodes are being run by the same company? I'm going to skip over here to someone from Alan Chu from Enya/Boba Network. While Bitcoin remains the most decentralized blockchain, Ethereum is a close second and certainly the most decentralized. This is like the first answer I've actually heard. Bitcoin is the most decentralized blockchain. Ethereum is close second. There we go. An actual blockchain name in here besides the Bitcoin one. With a diverse base of node operators and multi-centers of gravity when it comes to influencing the future of Ethereum, witness the iterations of EIP 1559 went through and how long it took to be adopted. Yeah, no other smart contract capable blockchain comes close to the level of decentralization yet, other than Ethereum, he's saying here. But hey, take a look into Bitcoin Lightning Network scaling, layer 2 scaling of the Bitcoin blockchain. There's some, looking to be smart contract capable. To some regards. Bitcoin is the most decentralized protocol in the entire ecosystem. This is what Ayesha Kiani of Ledger Prime. Great. Thanks for that answer. Let me see. Does he say anything else here? Ethereum mining, Ethereum. But Ethereum shouldn't be compared to Bitcoin in terms of decentralization, as both serve different use cases. Okay. Again, like I said, look into the Bitcoin Lightning Network. Daniel Barbosa of Hyperledger. Decentralization, Hyperledger. That's what I was talking about here for a USD coin cryptocurrency. Hyperledger and the Hyperledger Sawtooth through Intel. Decentralization has many angles, and one of them is control of underlying software and something in the open source community called the right to fork. We think seeing lots of different layer 1 networks all running similar protocols such as Hyperledger Fabric or Hyperledger Bestu / Ethereum is inherently more decentralized than a single layer 1 network. a single layer one network, no matter what the protocol. That is what Hyperledger community is building, an ecosystem with focus on interoperability. Nice answer. Darren Franceschini, sorry, I butchered your name like that. I'm trying my best I can. Darren, a block bank. We're still in our infancy, but more and more projects are moving towards becoming more decentralized. Okay, I want to drop that like gimmick term talk. We're just moving towards decentralized. I'll claim that any blockchains are I wouldn't claim that any blockchains are truly decentralized other than Bitcoin, which has no central control. Bitcoin's true strength. Okay. All the central companies mining Bitcoin? Come on now. Even Bitcoin. Is it really decentralized when you got central companies who have most of the hash power rate? Anyone can mine Bitcoin. I can mine Bitcoin. But still, there's massive conglomerate billionaire companies mining Bitcoin with tons of hash power, centralizing their central intake to themselves of the Bitcoin. Right. All right, cool. Bitcoin is way more conservative in many ways. It's not really moving forward, so there is no active developer or startup community around. Well, again, like I said, look into the Bitcoin Lightning Network, layer 2 scaling. It has to be. Oops. This person said Michael Symbolisti of Domination Finance says it has to be Ethereum. Great. Mitchell Cuevas of Stack Foundation. Bitcoin is probably not even close. BitNodes estimate there are over 13,000 nodes on the network today, while mining centralization has been raised as a concern, Bitcoin's design isn't predicted on, nor does it rely on decentralized mining power. I'm not going to let them pitch their own things in here. I'm pitching my projects here, so I just want to read the news. What Philip Gara, Octane Render, when you look at applications and use, in other words, what people are building on top of blockchains, Ethereum right now is the most decentralized. There we go. Roger Ver, what does he have to say? The original goal was not decentralization. Roger. The goal was censorship-resistant money for the world, and decentralization was the tool that was used to achieve that goal. Roger Ver, I'd listen to you more if I didn't hear that atrocious argument with was it Jimmy's song some time ago? CEO Jack Dorsey is right to scare everyone about hyperinflation in the morning brief of Yahoo Finance from Brian Sozzi, anchor editor at large. So this is more into finance news, and we're going to go on to a piece of technology news and close out this article.